$85, $85 per ounce. Pause. Let that number sink in for just 1 second. Because if you had told someone, anyone, back in January of 2025 that silver would be trading at over $85 an ounce just 14 months later, they would have laughed in your face. And yet, here we are, March 12th, 2026. Silver spot price this morning, $85.34 per ounce, and that is after a pullback, after what some people are calling a correction. After silver hit a jaw-dropping record high of $121.67 just 6 weeks ago. Think about that. 6 weeks ago, silver was at $121. Today, it's at $85. And some people are panicking. Some people are calling this the end of the bull run. But I'm here today to tell you that could be the single most expensive mistake you ever make. Welcome back to Silver Signals. I'm your host, Yali Jiang, and whether you've been stacking silver since it was $30 an ounce or you're just now waking up to what is happening in the precious metals market, you are in exactly the right place at exactly the right time. Today is Wednesday, March 12th, 2026, and as of the market open this morning at 12:38 a.m. Eastern Time, silver is sitting at $85.34 per ounce, $2.74 per gram, and $2,743.74 per kilogram. Today we're going to break down exactly what is driving this market right now, why the pullback from 121 is not what the headlines want you to think it is, and most importantly, what comes next. Stick with me all the way to the end because I have one insight toward the close of this video that is genuinely going to reframe everything you think you know about where silver is headed. And if you are new here, hit that subscribe button right now. This channel exists for one reason, to give you real, honest, no-nonsense analysis of precious metals so that you can make smarter decisions with your money. Now, let's get into it. Let's start with the full picture of where silver has come from, because context is everything in this market. At the start of 2025, just 15 months ago, silver was trading at approximately $32 per ounce. That was already elevated by historical standards. Solid, but not exactly setting the world on fire. Fast forward to today, and we are sitting at $85.34. That is a gain of roughly 166% in about 15 months. Pause. 166%. In 15 months. The S&P 500, for reference, has struggled to deliver that kind of return over 5 years in its best cycles, and silver did it in just over a year. But it gets more dramatic than that, because on January 29th of this year, just 41 days ago, silver touched $121.67 per ounce. That was a new all-time nominal high, a record, the kind of number that makes even long-time silver bulls do a double take, and then it pulled back, hard, from 121 down to the mid-80s. A correction of roughly 30% from peak to where we are today. And right on cue, the headlines started screaming. Silver bubble bursts. Precious metals sell-off deepens. Is the silver rally over? Sound familiar? Pause. It should, because we saw almost this exact same pattern play out in 2011. Silver ran from around $18 all the way up to $49.50 in April of 2011. And then it crashed hard, back down into the 20s, and everyone said it was over. And then, over the next decade, silver quietly became one of the most important industrial commodities on the planet, and the structural case for higher prices grew stronger with every single year. What we are watching right now is not the end of the silver story. It is a chapter break. So what actually caused silver to spike to 121 in January, and what caused the pullback? Let's talk about both, because understanding the mechanics here is critical to understanding what comes next. The January surge to $121 was driven by a perfect storm of converging forces. First, and this is the big one, industrial demand for silver reached historic levels in 2025. The global solar energy build-out consumed a staggering amount of silver. Every single solar panel requires silver for its photovoltaic cells. As the world races to decarbonize, the demand for solar panels has been absolutely relentless. Layer on top of that the explosion in electric vehicle production, because EV batteries, circuit boards, and power electronics all require significant amounts of silver, and you have a structural demand story that is genuinely unlike anything the silver market has ever faced before. Second, the US dollar was weakening sharply through the second half of 2025 as Federal Reserve rate cut expectations built up. A weaker dollar is historically rocket fuel for precious metals, and silver caught that tailwind hard. Third, geopolitical stress. And we will come back to that in a big way in just a moment. Now, the pullback from 121 to where we are today at $85, two primary drivers, profit-taking, plain and simple. When any asset goes parabolic, the smart money takes some chips off the table. That is not bearish. That is just how markets work. And second, Exchanges raised margin requirements for silver futures contracts, which forced some leveraged traders to close their positions regardless of their fundamental view. This is almost identical to what happened in silver in 1980, when margin hikes helped engineer a temporary price collapse even as the underlying case for silver remained intact. Pause. The metal did not change. The rules of the game changed temporarily. Now, I want to stop here and ask you something directly. Pause. Where are you right now with silver? Are you a longtime holder who has been riding this bull run from the 20s and 30s? Are you someone who bought near the top and is now watching the pullback and second-guessing yourself? Or are you someone who has been watching from the sidelines, wondering if you've missed the boat entirely? Drop your answer in the comments right now. I genuinely want to know. This community is one of the most informed precious metals audiences on YouTube, and your perspective matters. Are you holding, buying the dip, or still waiting? Let me know below. And while you're thinking about that, let's talk about what is happening in the world today, because the macro backdrop for silver and gold right now is one of the most extraordinary I have ever seen in my years of following this market. Let's talk about the Iran situation, because if you have not been following this closely, you need to understand what is happening and why it matters so deeply for precious metals. As of this morning, March 12, 2026, oil prices have surged past $100 a barrel again. Multiple fuel tankers in Iraqi waters were struck by explosive-laden boats in what is being described as a suspected Iranian attack. Iraqi officials have stated that oil ports have completely stopped operations. Iran has claimed responsibility, and this is the line that should stop every investor in their tracks, Iran has warned the world to prepare for oil at $200 a barrel. $200 a barrel. Meanwhile, Donald Trump has claimed that U.S. forces have struck 28 Iranian mine-laying ships in the Strait of Hormuz. The Strait of Hormuz, for anyone who needs a reminder, is the narrow waterway through which approximately 20% of the world's oil supply flows every single day. Pause. Think about that. 20% of global oil supply runs through a strait that is currently being contested militarily. Now, what does this have to do with silver? Everything. Absolutely everything. Geopolitical conflict and energy price shocks are historically among the most powerful catalysts for precious metals rallies. When the world feels unstable, when energy prices surge, when inflation expectations rise, when investors globally start looking for safe haven assets that are not denominated in any one government's paper currency, they turn to silver and gold every single time. We saw it in the 1970s during the oil embargo. We saw it in 2008. We saw it in 2020. And we are watching it happen again, right now, in real time. The situation in the Strait of Hormuz is not a background noise story. It is a front and center macro catalyst that could absolutely reignite the next leg of this precious metals bull run. And yet, silver today is trading at $85, 30% below its recent record high. Pause. I will let you draw your own conclusions from that. Now let's bring it back to the near-term price action. Because there is a very important fundamental dynamic playing out in the market today that I want you to understand clearly. The US dollar index, which what traders call the DXY, is firm this morning. It has been showing some strength in recent sessions, and a strong dollar creates headwinds for dollar-denominated commodities like silver. This is one of the key reasons we are seeing that modest pullback today, down 77 cents from yesterday's session. The market is also in a holding pattern ahead of fresh US inflation data that is expected this week. Why does inflation data matter so much? Because it directly shapes expectations for what the Federal Reserve is going to do at its March 18th FOMC meeting, which is just 6 days from now. The broad consensus among analysts and traders is that the Fed will hold interest rates steady at that meeting. No cut, no hike. And in a hold environment, the narrative around precious metals is complex. On one hand, high rates historically pressure gold and silver by making yield-bearing assets more attractive by comparison. On the other hand, and this is the nuance that most casual observers miss, the medium-term trajectory for the US dollar is actually tilted toward weakness. The United States is running fiscal deficits that are historically extraordinary. The national debt trajectory is one that fundamentally pressures the dollar's purchasing power over time. And as that long-term dollar weakness reasserts itself, as it historically always does, precious metals move higher. So yes, the dollar is strong today, but the structural story, the multi-year story, remains firmly in silver's favor. Today's headwind is not tomorrow's trend. Pause, remember that. Let's talk about the supply side of the equation, because I think this is where the most underappreciated part of the silver thesis lives. Most people think about silver demand when they think about why prices rise, but the supply story is quietly just as important and just as bullish. Global silver mine production has been essentially flat to declining for the last several years. New silver discoveries are rare. The permitting and development timelines for new mines are long. We are talking years, sometimes decades. And critically, Silver is not primarily mined as a primary metal. Roughly 70% of the world's silver supply is produced as a byproduct of mining copper, lead, zinc, and gold. This means that silver supply does not respond quickly or easily to price signals. When silver prices surge, you cannot just flip a switch and produce more silver. The supply simply cannot keep up with demand in the short to medium term. And demand, as we discussed, is being turbocharged by the green energy transition and the electrification of everything: solar panels, electric vehicles, data centers, defense electronics, medical devices, 5G infrastructure. Every single one of these industries consumes silver, and every single one of them is growing. Silver is not just a store of value. Silver is an industrial necessity, and the world needs more of it than it can currently produce. Pause. That supply-demand imbalance does not go away because of a 30% price correction. It actually becomes more urgent. And now, here's the insight I promised you at the start of this video, the one that I want you to really sit with. Pause. Here is something that almost nobody is talking about right now. Silver at $85 per ounce in March of 2026 is still, by several important measures, historically cheap relative to gold. Let me explain. The gold to silver ratio, which measures how many ounces of silver it takes to buy 1 ounce of gold, is currently sitting at roughly 94. That means it takes 94 ounces of silver to buy a single ounce of gold. Pause. The historical average over the past century is approximately 67 to 1. In periods of peak silver demand and monetary stress, like 1980, like 2011, that ratio has compressed all the way down to 30 or even 20 to 1. Now, gold right now is trading at approximately $8,000 per ounce. If the gold to silver ratio were to simply return to its long-term historical average of 67 to 1, not to the extreme of 30, just to the average, silver would be trading at approximately $119 per ounce. That is higher than silver's all-time nominal high from January. And if we were to see the ratio compress to 50 to 1, which would still be well above the historic extremes, silver would be trading at $160 per ounce. $160. Pause. So here's the question I want to leave you with. Not, is silver expensive at $85? The real question is, in a world of $8,000 gold, military conflict over the Strait of Hormuz, a green energy transition that is structurally consuming silver at unprecedented rates, and a US dollar with serious long-term structural pressures, does $85 silver represent fair value? Or does it represent an extraordinary opportunity? Pause. I know where I stand, and I think, after everything we have walked through today, you probably do too. Let's bring this full circle. We started today with a number, $85.34 per ounce, a number that 14 months ago would have sounded like the fever dream of the most bullish silver analyst on earth. A number that today, after a 30% pullback from an all-time high of 121, some people are treating as evidence that the silver rally is over. And what we have walked through together today tells a very different story. Silver is consolidating after a historic run that is healthy and normal. The geopolitical backdrop, with the Iran-US confrontation over the Strait of Hormuz pushing oil toward $100 and potentially $200, is exactly the kind of macro shock that historically re-energizes precious metals. The structural supply deficit is real and growing. The industrial demand from solar, EVs, and the broader green energy transition is not slowing down. The US dollar has near-term strength but medium and long-term headwinds. And relative to gold, silver remains historically cheap. Today's price is not a ceiling. Today's price, for patient, informed investors who understand what they own and why they own it, may very well look like an extraordinary entry point when we look back from the vantage point of 2027 or 2028. Pause. That is the Silver Signals thesis. That is the analysis. Now you have everything you need to make your own informed decision. If this video gave you value today, and I genuinely hope it did, please hit that like button right now. It takes 2 seconds, and it means the world to this channel. It helps us reach more people who are trying to understand what is really happening in the precious metals market, cutting through the noise, making smarter decisions with their money. And if you are not already subscribed to Silver Signals, what are you waiting for? We publish market updates, deep dive analysis, and silver education right here, consistently, because we believe that informed investors are empowered investors. Hit subscribe and ring that notification bell so you never miss an update. Pause. And do not forget, drop your answer in the comments. Are you holding, buying the dip, or still watching from the sidelines? I read every single comment on this channel. This is a community, not just a content feed. Your thoughts matter here. I'm Yali Jiang. This is Silver Signals. The market is moving, the world is changing, and you are paying attention. Pause. That already puts you ahead of most. I'll see you in the next one. Take care of yourselves, stack smart, and stay signal focused.